Good morning, good afternoon, good evening, wherever you are watching this video from. And welcome to this Forex trading beginners class. In this class, I'm going to be taking you through the start to finish of what Forex is to the ending. So this class is going to be divided into segments. It's going to be divided into parts, and I'm going to be taking it from start to finish so you can understand it better. So in this part, we are going to be looking at just the basics, the introduction to Forex, and just the basic parts. Then in the next part, we'll look at the terminologies and other few things I need to know in Forex. So today, let's understand what is Forex. So they say Forex is a short form for foreign exchange. Is the global market where currencies are bought and sold. It's just basically like exchange. Exchange means taking something to collect another thing. So for an exchange to take place, you need two people. You need the buyer and you need the seller. So same thing applies to foreign exchange, but in this case, you are instead of exchanging goods, you are exchanging money or valuables. So here you are exchanging money, a currency in exchange for another currency. For example, if you go to borrow the change, you exchange a certain amount of money, a certain currency for another currency. So that is what foreign exchange is basically. Then in now foreign exchange, you are using it to make money. So it is the largest financial market in the world with over 6 trillion traded daily. So there's over $6 trillion in the market daily. So forex trading, like I said, it involves two parties, the buyers and the sellers. Which, but in this case, they say forex trading also involves two currencies known as a currency pair. For example, Euro USD, which is equals to 101.1. So this means 1 euro is equals to $1.10. So if you think euro is stronger, you buy, and if you think it's weak, you sell. So I'll I'll explain why this is so, why they say this. This is under the types of currency pairs. So this is what it is explaining here. We have Euro USD. Two pairs has to come together to before a foreign exchange can take place. The first pair is known as the quote pair, and the base pair is known as the base pair is the second pair is known as the base pair. Sorry. So the quote pair is basically the pair that you're trading, is the pair that you are putting your money on. For example, if you are trading a buy on Euro USD, if you want to buy Euro USD, that means you are saying Euro is stronger than dollars. That means you are buying Euro. That you are buying the quote. Then if you are selling Euro USD, that means you are selling the quote, which is you are saying Euro is weaker than the US dollar. That means it will fall. So the quote is what we are trading in the what is it called, in the forex space. So there are other types of currency pairs that we should know about, and there are two types of currency pairs. We have the major pairs, which are the pairs that cross with the US dollars, and these are like the pairs that most people trade because they are less volatile and they are less manipulated. Less volatile in such a way that you market don't just move randomly, you understand, and less manipulated means there's something we call manipulation, in which you cannot just fake a move. A move has to go in the other direction. If market wants to buy, it buys. If market wants to sell, it sells. So example of those pairs across with the US dollars is the GBP USD, the Great British Pound, the US dollars, Japanese yen, the US dollars and Canadian dollars. There are other pairs across with the US dollars, but those ones that are called the major pairs. While the second type of pairs are called the minor pairs. These ones are the ones that cross with each other. These pairs can be manipulated. That means they can fake their moves just to take your money, and they are very, very volatile. They move crazily fast. Then the next thing we're going to be looking at is Forex sessions. There are actually 4 sessions in the Forex market. We have the Sydney session, the Tokyo session, the London session, and the New York session. So this is GMT time. Basically, this 4 session is now broken down into 3 sessions because the Sydney session and the Tokyo session are actually known as the what? They are known as the Asian session. So now we have the Asian session, the London session, and the New York session. So the main trading time is between 7 o'clock, 8 o'clock till around 12 or 1 o'clock. That is when you should be trading. And the overlapping session is when the market moves the most. So that is the main trading session. The from 8 o'clock to around 12 or 1 o'clock, but we can still trade within those times. So the Asian session starts around 10 o'clock. The Asian session starts around 10 o'clock and ends by 7. Then the London session starts by 7 o'clock and ends by 3 o'clock. And the New York session starts by 3 o'clock and end by 12 o'clock and ends by 9 o'clock. So that is how the sessions work. That is what session was, and we trade between the London sessions and the New York session because that is where market moves the most. That's where market moves the most. For example, if you are trading the Great British pounds, you have to trade it when the pounds banks are open, which is by the London time, and if by the London time and the New York time. So you have to be trading within those hours. So that's why we need the Forex sessions. The Forex sessions. So let's now move to the types of traders. We have 4 types of traders. We have the scalpers, we have the day traders, we have the swing traders, and the position traders. I'll explain everything to you. So these scalpers are basically the people that they go into the market fast. They go in to make fast money. So whatever they are making money within 5 minutes, 1 minute, 2 minutes, 3 minutes. Those are the scalpers. Then the day traders, they are the 9 to 5 workers of trading. Basically, we go into the market by 8. Like I said, the trading hours by 8, and they leave the charts before 5 o'clock or 5 o'clock. Then the swing traders are the ones that hold trade for a longer period of time. And position traders, those are like the banks and financial institutes. So these traders, we have time frames that they have to trade. For a scalper, his time frame ranges from the 15 minutes down to the 1 minute time frame. The day trader time frame ranges from the 4-hour time frame down to the 15 minutes time frame. The swing trader will use the daily time frame, the 4-hour time frame, and the 1-hour time frame. Then the position trader use the monthly time frame, the weekly time frame, and the daily time frame as their time frame. So scalpers, they use 15 minutes, 5 minutes, and the 1 minute or the 3 minutes. The day traders use the 4 hours, the 1 hour, and the 15 minutes. The swing traders use the daily, the 4 hours, and the 1 hour, and the position traders use the monthly, the weekly, and the daily time frame. When you go into the charts, you will understand better what I mean by that. And lastly, we are going to be looking at types of analysis. There are 3 basic types of analysis. We have the fundamental analysis, we have the technical analysis, and we have the sentimental analysis. So let's take it one after the other. The fundamental analysis. The fundamental analysis are the ones that use news. Basically, they use news to trade. For example, we know that Trump basically has been shaking the market. So they use the news basically to trade the market. They don't want to check the charts. They don't use chart. They don't use candlesticks. They don't use anything candle. They don't use the chart patterns. They only use news to trade. And the technical analysis, basically, we are the ones who use past patterns on the chart to trade the market. That we've seen this pattern before, and these patterns are likely to play out. to trade market. Then the sentimental analysts, they are the ones who use indicators, basically the algo traders that use indicators to trade, that use tools and indicators to trade. Those are the sentimental analysts rather. So this is the basics that you need to know about trading. You need to know the sessions, you need to know the type of trader, you need to know the type of trader you want to be, you need to know the type of analysis you want to be running. If you want to be trading only news, if you want to be trading only technical analysis, and if you want to be trading based off of indicators and tools, you need to know. Then you need to know